out there. I'm Mark Stern, and welcome to another edition of my channel show, Your Property Matters. And today I am joined by Sofia Jones of PennyHouse Mortgages. Good morning, Sofia.
Good morning. Thank you for having me.
You're welcome. You're welcome. So today I wanted to sort of really get into the burning question that everyone's having out there, which is what's going on with mortgages and interest rates and everything that goes around with it. I think just tell us a little bit about PennyHouse, what you do and who you help.
Okay, so PennyHouse, I set the company up about 5.5 years ago now, and we are mortgage and insurance brokers. So we're completely independent and we are directly authorised by the FCA. So what that means is that customers come to us, whether they're looking at remortgaging their properties, whether that's a residential or a buy-to-let, or if they're looking at buying, and then we can look for the best option for them and then go to them, help them with all the paperwork, which sometimes can be a bit of a pain if you're doing it direct as a client.
Yeah.
So, and we do it all day, every day. So we hope to make it a lot easier for clients and actually enjoy it, which is a bit mad.
Yeah, exactly. The enjoyment is part of it. I mean, I just, I love what I do so much.
Yeah.
It is such a huge part of my life, and it's really because of the business model that I actually am in that I love it so much. So, okay, look, let's sort of get right into it, because the market right now is so strange. I mean, I'll tell you what I'm experiencing. So with my particular business model, I generally don't like to carry a lot of stock because it's a personal estate agency service. I like to just focus mainly on looking after a few people at a time. But property is taking a lot longer to sell. And you can't pinpoint why. It's not just price. It feels like there are a lot less buyers out there. And I think this is one of the reasons why I wanted to chat to you today, because either a lot of people are under the impression that it's much harder to get a mortgage now, or they are just not in the position to do so, or they feel that the market is going to drop and they should hang on and wait till then. So what I'm finding are that the all of a sudden it's flipped, and the majority of buyers are people with properties to sell. And those properties aren't even always on the market yet. But I think the question to you really at this stage is, I just want to sort of know, with the Bank of England putting up the interest rates, does it automatically fall suit that the lenders are putting up their rates?
No, it doesn't. So there's a few things that you've touched on there, and what kept coming to my head was media. Now, I don't want to blame the media.
They do, because I'd love to blame them.
But all we ever hear, and you'll know this even last week, rates are going up, rates are going up, rates are going up. And what we haven't heard recently, very much, I mean, I don't tend to watch the news because it's a bit too negative unless I really have to, but they don't really broadcast the fact that rates have come down. So in terms of fixed rates, yes, the Bank of England base rate has gone up, and yes, we were all expecting it. But unless you're on a tracker mortgage, which is the one that tracks the Bank of England base rate directly, then that's not going to affect your mortgage payments. Mm-hmm. If you're in a fixed period, then it just stays the same. And then when you come to remortgage out of that fixed period, if you're looking at going on to another fixed period, what we've seen, and last week we had HSBC and Virgin, who both broke the 4% interest rate barrier on 5-year fixed. Yes, you've got to have a certain amount of equity in your home, but other fixed rates are following suit. So the Bank of England base rate isn't going to affect those, and the lenders have already, those fixed rates are already there, they've already been priced in. So unless you're on a tracker or you're on a standard variable rate because your fixed rate has come to an end and you're one of the people that are sitting on the fence, which is we're kind of seeing a little bit of at the moment, and we have done since December, January. Those people are now coming out of hiding, let's say, and they're looking at their options. And what I'm finding a lot of in terms of what people are doing is, historically, over the last few years, we've looked at doing a lot of fixed rates because they were so low. And now people are looking at these trackers. So they're looking at looking at remortgaging onto a tracker as a kind of short-term solution, because they think that some of the fixed rates are going to continue coming down, and that's kind of the word word in the market. Obviously, no one's got a crystal ball, but I'm seeing a trend of those, with the idea that they'll look at remortgaging again in 6 months to a year as they watch these fixed rates.
So then how can people prepare themselves to get a mortgage at the moment? When we've been having conversations recently about this.
Yeah, we did. So there's to get yourself in the best place. First of all, if you're a first-time buyer, you want to be, and even if you're a remortgager, but first-time buyers tend to not really, some of them don't look at their credit reports. So that's quite an important and very easy thing to do. If you try and check your credit report online, there are various different agencies that you can sign up to. Some of them are free, some of them aren't. So just watch out for that. Just check there's nothing nasty on there, because maybe a car parking ticket, or there's certain things that can very, very easily miss. So that's number one. And then if you're self-employed, if you're a sole trader, you want to be speaking to your accountant and getting your tax computations and your overviews. Most people have got their tax computations. Overviews, people don't seem to have. They're the extra documents. Ask your accountant. And then limited company, if you're a limited company and you're self-employed, then you want to be getting your limited company accounts, which again, we'd hope that your accountant would have. When I look at mortgages, will contact the accountant for a client and copy the client in, just to try and get those documents, because I appreciate it can be a bit of a minefield. But if you're looking at this before you go to an advisor, they're definitely good documents to have. And then it's the kind of normal, easier stuff you think, like proof of address, like driving license and passport and bank statements. But the key things are income and credit. They're the ones that tend to cause a bit of a lag.
Income. Right. I mean, what rates are you seeing at the moment? And are they still, are lenders still doing, special offers and things like that? Or is that all stopped now?
No, it hasn't stopped. I mean, so some of the special offers we're looking at, I mean, on the buy-to-let side, which I do quite a lot of, you've got green mortgages. I know they're everywhere. So anything that's got an EPC, usually about C or above, can get a slightly better interest rate than the standard range. And then if you are looking, I mentioned before, HSBC and Virgin were doing under 4%. That's for a certain loan to value. So, and some are on remortgage, some are on purchase. You've got to check that. But if, as an average, we're looking at about 4 to 5%. Yeah. In terms of a fixed rate mortgage, and then the trackers are I'm going to say variable, to be honest, because it depends on the lender. But again, it's in that ballpark. The mortgages that I mentioned from HSBC and Virgin, some of those have got incentives, as have others on the market. So things like cashback or free valuations, or legals paid for by the lender. So there are still incentives out there, and the rates definitely coming down a little bit from where we've seen in December and January.
That's good. So that's very positive. That is really positive. I mean, there's a couple of things you mentioned there. By the way, I also don't watch the news at all. Life is so much more enjoyable when you don't know what's going on out there in the big world. But I do actually follow property news, but just within my own mindset. I mean, it's mad. It's like I'll read the news, or I'll listen to the news about property, and then I'll be out there and I'm working it, and I'm thinking, well, this just isn't the same.
That's exactly the same. Yeah,
not the same. I sold something a couple of weeks ago. I had 2 people fighting for it, and it went for over the asking price. But yet, at the same time, minutes later, I'm having a conversation with a potential buyer on another property, saying, "Well, prices are dropping. I know they're dropping." It's like, well, this has just happened. This is the reality of it, because there's such a small amount of supply at the moment, that the supply is keeping prices steady, because in reality, only people that need to move at the moment are moving, and therefore you're always going to have that will keep the supply low, the stock low. That's it. The other thing that it's like, wow, I learned something there. EPC ratings could affect the interest rate that you get.
That's right. So with EPCs and interest rates, some of the interest rates you can get will be slightly cheaper on EPCs of C and above, and those that applies to residential and also to buy-to-let mortgages. Now, one of the things that I'm seeing quite a lot of, the conversations that I'm having with landlords, if they're looking at their buy-to-lets, we've got these EPC changes coming in due 2025, just been changed to December 2025 opposed to April. Now, I think the average cost, something I read, was £9,000 for the properties to be brought up to a C or above. And what I'm doing with landlords is having a look at their cost. Obviously, you've got to weigh in or weigh up whether that £9,000 is worth spending. One, for the mortgage saving, but more importantly, how long is that going to take you to make that money back as a landlord? And is it viable for you to spend that money? But they have to do it for 2025 at the moment, as long as the regulation then doesn't change. And you and I know, being in the industry, that these goalposts can move quite frequently.
Yeah, absolutely. I mean, do you know what? It's funny. I always reflect, because I've been doing this for so many years, on the condition of properties. And if I went back 10, 15 years, the amount of properties I would see that were in poor condition were quite a lot. You know, I would say 50% of properties were in poor condition, and people would be happy to sell them like that. Lately, it's maybe 10% of properties are in poor condition. Everything just, people are really, I mean, I think the quality of workmanship is amazing. When you go into homes now, it's like every home looks like a hotel, like a 5-star hotel, you know. And if it's not to that standard, buyers are expecting to negotiate on it to get it to that standard. So our expectations of what we class as a good finish, and they're very interested again in the because of the cost of living with electricity and gas and everything. You know, they're looking at EPCs now. They are taking that into real consideration. So it all means that we're going to be living in a little bit more comfort and luxury, I guess, over time.
Yeah, and I guess, you know, the area will also have an impact on that. I mean, which areas are you covering?
Yeah, so I'm based in Watford, so I'll cover. But I always say I'll go anywhere that I can drive half an hour. Because I quite like driving. Doesn't matter.
Nice part of the country as well. Yeah.
Yeah, exactly.
Nice houses there.
So yeah, I mean, it's like I'm just about, actually, I've done a deal in Kings Langley yesterday. I'm out in St Albans quite a bit. Then it's like Radlett, Elstree, Boreham Wood, and then go into a little bit into London. So I'll go into Stanmore, Edgware, Mill Hill, properties around there, and then sort of keep going around. And it's sort of more to the west, I guess, you know, to the west as well. So it's Amersham, Chesham, going out that way. So, and as I said, I don't mind, especially a day like today. It's beautiful weather out there. I don't mind a drive, or sometimes I'll take my motorbike, and it's just a nice way of working and helping people. So that's
it's and yeah, nice part of the country, definitely. So this obviously there's quite a lot EXP. I tell you, I'm seeing this model all over at the moment, all over LinkedIn, all over everywhere. Do clients mention it to you at all? Are they commenting on it? How are they adapting to it? Or?
Yeah, they're adapting to it so well. So the best thing that happened to us was lockdown, because during lockdown you had lots of big trusted brands and names that went into liquidation, and they're no more. So it also became on the fact, and then people felt that, well, they couldn't trust these big companies anymore. So it's about the people rather than the company, because the person's still there. So if you're not working for a particular company, you're still that person. And with this business model, it's given me the freedom to really engage with people and really work on a personal level. And you know, I'm so humbled by all the reviews. I mean, I'm going to say, you know, this is me chatting to you, but you're not chatting to me. I always say to people whenever I meet them, don't worry about my website. I mean, my website's amazing. It's all part and parcel, but please just Google Mark Stern estate agent, because the reviews, it's like there's a theme running through them all. And I'll say to my wife, how comfortable these people are saying these things about me? And it's obviously because it's what I'm doing, and it's just caring so I can care. I've got all EXP agents, we've got all the same tools as every other estate agent. You know, we just don't have a shop in the high street, but then that's no big deal. People don't walk around the high street looking in shop windows for properties that are on pieces of paper anymore. You know, it's
no,
you know,
they don't. And you know, I think obviously if you need to be professional, and people, I think people obviously need you to be a proper business, or look at like it's a proper business. But since lockdown, I completely agree with you. It's been a really good thing for not just our industry, there'll be a couple of others, but where people have realised exactly what you've just said there, and you can see how passionate you are about it. And it's the emotional reward that comes from that. You know, when someone says when you get that kind of feedback from clients, it's amazing. And it just drives you forward to work harder as well. You don't need to be in an office for that. I mean, the business model is very similar to PennyHouse, and I'm almost thankful for lockdown. That sounds wrong, but the PennyHouse was always set up so that people could work at home and be flexible. And you know, we always work very hard, and you don't need to be in an office. You don't need people to come and see you face to face. And so I completely understand that model of flexible working. And also, if you can fit that in and then have life around that, it actually makes people much happier. Certainly don't work any less, and we certainly don't work any, and you know, we don't not work as hard. Quite the opposite, I think. I think if you're happier, you do a far better job.
Oh,
I can see that in everyone in PennyHouse.
Yeah, absolutely. You just, you know, I work into the, you know, when I used to work in agency in a shop, I'd come out of that shop and switch off I wouldn't have a company mobile phone. It would just be, that's the end, door shut, back tomorrow, not think about it. You know, now I'm sitting here in the evening, I could be watching TV and somebody will email me and I'll just be on my phone emailing them back. You know, watching a bit of Love Island, but still messaging back.
Well, when work fits into life like that, you know, you don't. Everyone goes on about work-life balance and which is fine. But if you really enjoy what you do and it's not stressing you out, then it's making you happy. You don't need to go, right, I'm not working. Yeah, that's my opinion.
Yes, so much. No, it is exactly like that. Oh, well, look, I think that hopefully this is helping people. I think, you know, what you do, it's like great synergy here between what we do. You know, we're all here to try to help. We're both here to try to help people actually move home. That's what it all comes down to. Move home, and that enriches people's lives. It makes people happy. It's one of our biggest enjoyments in life is where we live and our environment. So that's what we're going to do. You've got your number up on there behind you on the screen. If anybody wants to get hold of you, you know, PennyHouse, Sofia. And yeah, let's just continue. Hopefully this has helped people just by giving them an understanding of what's going on out there right now. And don't listen to the media and just get on with your life. Move, get on with your life, get your next property and move and enjoy your life and your family. Anything
turn the news off, come and speak to me and Mark.
Yeah, that's it. Oh, listen, thanks very much. Enjoy the rest of your week. Take care.
Thank you very much. You too.